let's get more on today's sell-off now. Bring in Tom Lee, the head of research for Fundstrat Global Advisors. Tom, great to have you with us.
Thanks for having me.
In terms of the sell-off today, you think that this is sort of a reversal of the momentum trade?
Yeah, I mean, I think it's pretty healthy profit taking. You know, stocks can't go up forever. We've had already a great July, so I think it's nice to see stocks pull back, and I think it's good to see rotation in leadership. So, you know, to me, it's painful, but I think it's really healthy.
I was sort of taking a peek at the conversation you and Rob Slimer, your technical analyst, were having. I think it was on Twitter. And one thing that I thought was interesting that Rob had pointed out was that gold was higher today, but we did see miners, and in particular the junior miners, reverse, really indicating that this is an unwind of some of that momentum. How long do you think a move like this lasts?
You know, in 2020, growth has led, and there have only been really short periods of value leadership. I don't think that value sort of sustainable leadership takes place until we really break the path of the virus. So I think right now, unfortunately, the virus is spreading at an uncontained rate. Until we can conclude, at least the market can conclude that that's peaked, you know, I think growth is fine. And I do think people are making too much of the sort of top 5 stocks are too much of the S&P market cap. You know, they're 22% of the market cap, but they're close to 20% of earnings. So they're not disproportionately representing earnings share.
Brian, you got a question?
I do. Hey, Tom, it's BK. So, you know, you made a tremendous call when the market was down, and you tend to be a bit of a contrarian. So I'm surprised up at these levels that you aren't a little more cautious. Coming into the election with potential for I wouldn't even call it a second wave, this tsunami wave coming into the fall. What gets you concerned? None of that concerns you at all?
I mean, Brian, there's a lot to be worried about. I mean, the economy's still stuck in neutral. The virus is still growing at an uncontained rate. But on the other hand, when I look at positioning, nearly the majority, I wouldn't say nearly every, but the majority of our clients that I have a conversation with are really cautious for the reasons you've mentioned, and for the obvious reasons, like earnings are terrible. There's so much cash on the sidelines, but when you've got negative sentiment, retail sentiment negative, nearly $5 trillion of cash, and then a VIX that's about to break down, I think this sounds like the next, you know, 100 points, next 7% is higher, not lower. And I think that's contrarian, because I think people think we're topping right now.
Tom, we're going to leave it there. Great to speak with you. Thank you.
Thanks.
Tom Lee of Fundstrat. Karen, you know, Tom just hit on a bunch of points that you make when you explain why you stay in some of these big cap tech stocks.
Right. So I stay in them because I still like them, even though their valuation is a little stretched. But then I also have names that are, you know, more so for the banks, for example, right? If things get better in the country in terms of reopening and the economy feels like it's maybe getting some of a floor under it, then I think those will do better. I'm always nervous. Whatever Tom says, he makes these bold predictions, and I always think, wow, that's crazy. And he's been right so many times. It doesn't feel to me like, you know, like the market's about poised for another big breakout, but he's been right so many times. I got to think, wow, maybe there is just so much money on the sidelines and we don't even need further Fed stimulus. It's just too many people think the market's topping out.
And he makes these bold predictions in
monotone.
So it's like you don't even realize that they're bold until after you sit there and you think about it, Bono. And what did you think? I mean, basically, he's saying the pain trade is going to be higher at this point.
Sorry, Bueller. You know, it does make a lot of sense. He makes some great points. Listen, there is $5 trillion on the sidelines. And then on top of that, we have Fed stimulus that's continuing to be more speculative in nature. So, I mean, it's a logical argument, right? Like, if I go to pick it apart from both a technical and logical standpoint, it makes a lot of sense. Again, we can make the valuation argument as a contrarian to what he said. But again, I really don't think this rally, I mean, the last leg of this rally has really been leaning on valuation. It's growth, it's forward earnings out to 21, 22. And as we said, it's really a Fed put. There's a Fed put in the market, and there's no denying that. And I think trying to overthink that point, for one, hurts my head, and I think we overcomplicate the equation here.